In manufacturing, overhead costs include indirect expenses such as rent, utilities, depreciation, and other fixed costs that are not directly tied to producing a specific product. These costs are usually allocated to products using a predetermined overhead rate. Let's say we have a company that produces widgets. To calculate the predetermined overhead rate, we need to estimate the total overhead costs for the period and divide them by an estimated level of activity. For example, let's say our company estimates the total overhead costs for the month to be $50,000 and expects to produce 10,000 widgets. We can use the formula to calculate the rate. Predetermined overhead rate equals estimated overhead costs divided by estimated level of activity. In our case, the predetermined overhead rate would be $5 per widget. $50,000 divided by 10,000 widgets. Now, we can apply this rate to each widget produced to allocate the overhead costs to each product. By computing a predetermined overhead rate, companies can better understand the true cost of producing their products and make informed decisions about pricing and production levels. As a manufacturer, it's important to understand how to apply overhead costs to jobs and calculate the total cost and unit product cost of a job. In this video, we'll explain how to do this using a predetermined overhead rate. To apply overhead costs to jobs, we first need to calculate the predetermined overhead rate for each job. This is done by multiplying the predetermined overhead rate by the actual activity level for each job. The total overhead cost is then added to the direct materials and direct labor costs to obtain the total cost of the job. For example, let's say that a job requires $100 in direct materials, $50 in direct labor, and the predetermined overhead rate is $2 per machine hour. If the job takes 25 machine hours to complete, the total overhead cost would be $50. Adding this to the direct materials and direct labor costs gives us a total cost of $200 for the job. Alternatively, a plant-wide predetermined overhead rate can be used to allocate overhead costs to jobs. This method uses a single predetermined overhead rate for the entire plant based on total estimated overhead costs and total estimated activity levels. To calculate the unit product cost using a plant-wide predetermined overhead rate, we simply divide the total cost of the job by the number of units produced. This gives us the unit product cost. For example, let's say that a job produces 100 units, and the total cost of the job is $1,000. Dividing $1,000 by 100 units gives us a unit product cost of $10 per unit. By using predetermined overhead rates, manufacturers can allocate overhead costs to jobs more accurately and calculate the total cost and unit product cost of a job more efficiently. If you're running a factory, you know how important it is to keep track of your costs. You need to know the total cost of a job and the unit product cost to make sure you're making a profit. Overhead costs are indirect costs that are necessary to keep your factory running, but aren't directly tied to a specific job. To allocate these costs to specific jobs, you need to use predetermined overhead rates. Predetermined overhead rates are rates that you set at the beginning of a period, based on your estimated overhead costs and your estimated activity level. They help you allocate overhead costs to jobs based on the activity level of each job. Let's start by looking at the job cost details for a particular product. The direct materials cost for the job is $10,000, and the direct labor cost is $5,000. To get the total cost of the job, we also need to consider overhead costs. Now, we assume that, We have multiple predetermined overhead rates A and B, based on a different cost driver. For example, the overhead rate A based on machine hours is $5 per machine hour, while the overhead rates B based on direct labor hours is $10 per direct labor hour. Let's say the job required 500 machine hours and 200 direct labor hours. Using the predetermined overhead rates, we can calculate the overhead cost for the job. For machine hours, the overhead cost is $2,500. For direct labor hours, the overhead cost is $2,000. The total overhead cost for the job is $4,500. Now that we have the overhead cost, we can calculate the total cost of the job. The total cost is the sum of the direct materials cost, direct labor cost, and overhead cost. In our case, the total cost of the job is $19,500. Finally, we can calculate the unit product cost by dividing the total cost by the number of units produced. If we produced 1,000 units, the unit product cost would be $19.50. By using multiple predetermined overhead rates, we can accurately calculate the total cost and unit product cost of a job. This information is crucial for making informed business decisions and ensuring profitability.